So, good morning or good afternoon, dear ladies and gentlemen. It is my sincere pleasure to welcome you to today's webinar. Hopefully, you are still all doing well and keeping spirits up throughout these long and challenging times of COVID-19. The highly dynamic Asia-Pacific region has always been an important part of many supply chains, be it for sourcing, manufacturing, or distribution. The ongoing pandemic, though, continues to cause multiple operational and business disruptions to cross-border supply chain structures. On the other hand, the challenges caused by COVID-19 and its related phenomena pushed forward some of the most future-oriented trends like digitalization and sustainability. So many businesses currently face the necessity to optimize and realign their supply chain structures in order to provide a panic-proof, sustainable business foundation for the future. In this session, we will highlight some of the specific challenges and trends in the Asia-Pacific region and share an economic outlook into the near future with you. Though we all probably had our fair share of digital meetings in the past few months, let me just quickly guide you through the technical side of this session. On the top right corner of your screen, you will find the control panel. Here you may adjust the audio settings and choose between computer audio or headset, for example, if available. Please note that as an attendee, you are muted by default. A little further down, you will find the question panel. Please use this tool to insert all your questions or comments. During the session, you may do so anytime. It won't cause any irritations. And we will take down everything coming in and attend to your questions later on in the Q&A session at the end. As to the schedule of this webinar, we will start with trends and challenges in supply chains in Asia Pacific by my dear colleague Christian Swoboda, head of our Malaysia offices. And his presentation will be followed by an elaborate economic outlook by Julia Goh, senior economist at UOB. We will round up the session by the Q&A for you to submit your individual questions. Please note that this webinar is being recorded and will be made available for you or your colleagues to recap anytime later on. Looking forward to a most enlightening session. It is now my pleasure to leave the stage to Christian. Thank you.
Yeah, thank you very much, Bettina, for the nice and kind introduction, and also a very warm welcome from my side. Yeah, very glad to host this webinar as a series on supply chain, and in particular Malaysia is a alternative supply chain hub in the Asia Pacific region, together with the Malaysian Investment Development Authority, MIDA, and the United Overseas Bank, UOB. And I'm in particular glad to talk to you today together with Julia Goh, as Bettina already introduced, the senior economist of UOB Malaysia. The name Supply Chain Bites follows the idea that we wanted to provide you with bites of information. So we want to have around, or we will try to keep this presentation in total to 30 minutes, followed by a Q&A. And as you have seen in the invitation, we have three separate webinars, this today's session, next week, and the week after. Next week is more on Malaysia and banking opportunities, and the week after on legal, tax, and financial reporting points when it comes to supply chain and management. With that said, let me start with the key trends. As you can see here already, we have identified these 5 trends in supply chain in the region, with following by their impact. Of course, the first and most prominent is the COVID-19 pandemic and the potential long way back to normality. We also want to talk about the second trend, the geopolitical risk, which have been increased during the past The third trend is regionalism and the available free trade agreements, followed by sustainability or ESG in Asia Pacific, and last but not least, digitalization in supply chain. We have looked into those trends as lawyers, tax advisors, and business consultants, and we would like to provide you with a few ideas how you as a business can address those trends and how you can make most of them. Next slide, please. So let me start with the most obvious challenge at the moment, the COVID-19 pandemic and the potential long way back to normality. As you can see, we have tried to give you an update on the current numbers. It is fair to say that the recovery in the Asia Pacific region might be uneven. We see already an unequal rollout of vaccines. And considering also the regional hotspots which are still there, it is very likely that business and also business travel and so on will not resume to the pre-COVID situation anytime soon. Julia will look into the economic implications of the pandemic in more detail. From the legal and tax perspective, we would like to highlight two underlying or related trends. Number one, as you know, there were a lot of government measures, for instance, moratoriums, that companies do not need to repay debt immediately. Also, with there's an effect on potential insolvencies. We see a lot of government stimulus packages, and this combined with low interest rates might lead to a number of distressed companies considering the current economic situation. And this, in our view, might increase the risk of more insolvencies in the near future. And this was also addressed by the IMF very recently. So what is your response, or how can you actually respond to this potential trend or challenge? As a challenge, you would rather like to protect your business in, for instance, revising payment terms, considering collaterals or securities in your contracts. You might apply a better KYC procedure when it comes to new business partners in terms of are they in a proper financial situation. On a more opportunistic point of view, you could also, of course, consider also M&A options in the region when it comes to, for instance, distressed M&A. The second trend we see here has something to do with the government stimulus packages. So we saw and also see this year a lot of new stimulus packages around the region from different governments, and these packages call ultimately for refinance by governments. So we think that companies for the near future need to focus a lot on tax compliance and in particular transfer pricing compliance, because governments will look into these aspects of refinancing. Next slide, please. So the next trend I would like to cover are the geopolitical risk. And we think that the year 2021, that in the year 2021 we will see an increase of geopolitical risk, in particular around China and its relationship to the West. To say it very generally, we saw already in the past under the Trump administration a lot of tensions between the United States and China. It does not really look like that these tensions are going anywhere very soon. On top, last year we saw also tensions with Australia and China, and very recently now with the EU and China also certain tensions on on particular political implications. On top of this, or considering these tensions, China has also last year introduced the so-called dual circulation strategy with a higher focus on the domestic market. So in order to protect its interests from the maybe more hostile outside world, China might look more inwards. And this is also a signal for foreign companies. And on the left here, you can see that in particular German companies are highly invested into China, and China is by far the largest trading partner, of course globally, but also in the region. And this imposes, of course, a certain risk level for German companies. And it might call, depending, of course, on your business, and also here, Julia will also look into this a little bit more in detail on your particular business, but it might call for a diversification strategy. We have heard in the past already for quite a while about the famous China Plus One option, which was more driven by cost factors. Basically, the strategy means moving parts of your operation outside China to South Asia or Southeast Asia to more cheaper locations. And in the future, this might also be a diversification strategy when it comes to geopolitical risk and to mitigate those risks. Next slide, please. And when you do consider to diversify business operations in the region, it is important to try to make most of out of free trade agreements. I have called this here slightly the noodle ball, following the famous term spaghetti ball, which was used by trade lawyers in the past. Basically, it describes a situation where you have a lot of different free trade agreements, and they might be, particularly for smaller companies, which I will address soon, slightly complicated to navigate in. This whole system of basically preferential trade agreement stands next to the World Trade Organization and the framework of, as you may know, GATT and GATS, so basically the trade in goods and in services, which is non-discriminatory versus a more preferential arrangement, which is by nature slightly discriminatory if you are not within the group. And even though the World Trade Organization has now a new Director General, considering, even though the World Trade Organization has a new Director General, considering also the geopolitical risk, which I have addressed before, and already the existing free trade agreements, we assume that there will be no major change in, let's say, trade policy. This is in particular relevant for of course, companies doing business in the region, and it might be a challenge for particular SMEs because trade compliance, to considering which free trade agreement might be applicable to you, to comply with rules of origin and so on, can be a challenge. However, we think that the long-term gains out of these free trade agreements, the market access you might gain via the application of them, outweigh the compliance costs and the initial setup costs. Okay, next slide, please. Yeah. So the next trend I would like to address is the sustainability in supply chain, or ESG, as it is a more modern term now. So ESG stands for environmental, social, and corporate governance factors within businesses. And this term is, of course, more used for particular financial products when you think about ESG funds. But it has also already implications in several jurisdictions when it comes to larger companies. Listed companies have to do certain ESG reportings. And given the recent consumer preferences, if you think about higher awareness of consumers, in particular in the West, on environmental factors, and also the regulatory efforts to to suit those public demands, we believe that ESG will play a much bigger role and will be more important for more companies in the near future. And you can see this already with some pieces of new legislation in this regard, in particular legislation which has an external effect. And I think here about one, the German Supply Chain Act. You might have read about this in the news. So Germany is planning to create a law which establish a due diligence obligation for German companies when they're headquartered in Germany for human rights and environmental protection in their entire supply chain. And if this is passed, the law becomes effective in January 2023. Next to it, there is also an EU directive with a very similar scope. And it will also focus on ESG compliance of companies within their supply chain. So having said this and considering also the particular business environment here in Asia Pacific, we think this might create a certain risk for companies being invested in doing business here in the region. Because if you think about different environmental standards or different social and employment standards, there are also other human rights issues. Think about cases of forced labor, or think about that whether to what extent employees are allowed to be unionized in companies. All this plays there a role, and it constitutes a certain risk level for companies when they do business here in Asia Pacific. So we think in the future, companies who are subject to those legislation must be more aware and work more on their compliance in this area. Okay, next slide, please. Yeah. So the last trend I would like to focus on is digitalization or digital transformation of supply chain in Asia Pacific. I mean, as you all know, COVID-19 has given basically a new impetus, a boost to digitalization. And also when it comes to operations and productivity, of course, digitalization is the main driver of growth for the near future. When it comes to digital competitiveness in the region of Eastern Asia, based on the IMD ranking, it's the Institute for Management Development based in Switzerland. The region of East Asia is currently leading, followed by the EU or Europe in general, North America, and number 4 is then already South Asia and the Pacific. But in this region, of course, the picture is also slightly diverse. Singapore here is in the lead. It's a top country when it comes to digital competitive, actually also globally, not only in the region. And the factors they considered here were knowledge, technology, and future readiness. Companies who invest in digital transformation, they must, when they do this here in the region, of course, consider not only infrastructure, maybe digital competitiveness ranking is can also lead here slightly, but infrastructure is one point, the skill set of employees is another, and of course also the regulatory framework. We have tried to highlight here a few things, but this is definitely not all. Of course, data protection is one thing, privacy, digital taxation might be also a future issue. And also very, very new legislation comes into play. So for instance, Singapore this year passed a law on 3D printing, of course, to prevent the printing of arms. But this can have an implication, of course, to companies in this area when you also think about the application of new technologies. And we basically see there a changing regulation or regulatory landscape, and companies need to adapt to this. And having said this, I come to my more or less last slide. Next slide, yeah. So basically, the five takeaways for you would be consider the long-term implications of COVID-19, to understand geopolitical risk, consider diversification strategies if applicable to your business. If you do so, of course, also in other ways make the most of free trade agreements, proactively manage ESG risk in the region, and last but not least, digitalization is the main driver of growth, but might require training of workforce and further adaptation here in the region. Having said this, thank you very much for your attention, and I would like to hand over now to Julia. Thank you very much.
Hi, good morning, good afternoon, everyone. I hope you can see my slides. I hope everyone is well, keeping safe. Just a little bit about myself. I am the senior economist at UOB, and I'm based in Kuala Lumpur in Malaysia. And I have been covering the Malaysian economy, but I also look at the global and regional developments, and I have been in this industry for over 15 years. So for today, I guess part of navigating supply chain challenges, businesses are choosing to diversify, to deleverage, and as Christian mentioned, also to digitalize. And it's not just about being strategic, but I think it's also increasingly becoming part of managing risks, as we've seen through the pandemic and also through these recent years where we've seen heightened geopolitical risks, right? In fact, in the last decade, just to recap, we've seen a number of events that have shaped the way businesses are choosing to do their businesses. In fact, early in the decade, we just came out of the global financial crisis, the European debt crisis, the great oil price crash in 2014-15. There was also the Brexit vote in 2016, and then we had Trump elected as the US president in 2016. That changed the geopolitical landscape. 2020, we have the COVID-19 pandemic. And amidst all this, we've also seen new risks emerging, like climate-related risks that can affect supply chain movements, and also technology risks as businesses adopt greater digitalization. Right? So in short, there are a number of issues and opportunities that we can discuss. But just for today, I would just like to touch on or give you an overview on how we see the current economic outlook, also the macro landscape that can shape business decisions and also supply chain movements in the next decade. Right? And then finally, some information on Malaysia and how it could be an alternative supply chain hub in Asia Pacific. So in terms of the economic outlook, we see signs that conditions are turning, but the recovery is uneven. Despite market optimism, we are not out of the woods yet, and there are still lingering downside risks. Firstly, the pandemic is not over. In fact, just recently, the ECB president said that we are clearly still dealing with a pandemic crisis. Right? We've seen resurgences not just in Europe, but also in Asia Pacific in different parts, in Thailand, in Philippines, even in Malaysia. And I think the strategy going forward for a lot of governments in dealing with this resurgence is ramping up the vaccine rollout, right? So this year, even though we see a resurgence, we don't expect the negative impact to be as severe as last year, because we think that countries' governments will continue to try to keep their economies as open as possible, but the strategy they will take will be to ramp up the vaccine rollouts. So which is why I think we are monitoring two sets of indicators, the rise in cases, infections, and also the pace of vaccine rollouts. And what we've seen is that so far US, UK, has been more successful in pacing and rolling out their vaccines, which is why I think the markets expect that the recoveries in these countries that are able to more effectively roll out the vaccines will have a better chance of a stronger recovery. So I think it's important second half that we continue to monitor the pace of vaccine rollouts, as it will determine the success rate of the recovery path. Then when we look at the progress of GDP, of performance so far, I mean, overall, we have seen the recovery taking shape thanks to aggressive policy support, relaxation of containment measures. In fact, the IMF has also raised the global growth outlook to 6%, mainly because of more optimism about US and China. And also developing countries expected to rebound 8.6% this year. But the recoveries, as I mentioned, is uneven across countries and across sectors. And as you can see from the left-hand side chart, that most countries have seen a rebound, right, in the fourth quarter of last year. Some have managed to show a positive GDP in the fourth quarter of last year, like China, Taiwan, Vietnam. And I think this trend is expected to continue into the first half of this year, where first quarter, we've seen the first signs of recovery, with Singapore reporting a very small GDP expansion. Nevertheless, it's still a positive trend. So going forward, I think we will expect that this trend will continue to improve, but again, the rate of recoveries will differ, because as you can see, the countries at the bottom end, well, they are still trying to manage, I think, trying to contain the rise in infections, and they are still trying to roll out their vaccine plans, but I think some countries are still having issues in securing sufficient supplies. Okay. So generally, when global indicators have shown improvement, and which is why it's supporting the optimism earlier this year, purchasing manager indices have stabilized, showing positive trends. Even global equities has improved. When we compare where global equities are now compared to the 2008 global financial crisis, it's actually the performance has surpassed the performance back in 2008, 2009, right? Even in terms of when we track phone mobility indicators, we have seen that as countries relax their containment measures, we have seen a recovery in retail and recreational social activities. So that helps to support the services sector. And when we look at even good containment shipments, global semiconductor sales, global exports, that's also rebounded and recovered. US Treasury yields have moved up, also suggesting on the back of expectations of a vaccine-driven recovery. And of course, the commodity prices have come back on the back of expectations of recovery going forward. So alongside with expectations of recovery, I think another emerging risk that businesses would be on the watch out for now is inflation. Because of, like I said, growth recoveries, I think there's been a lot of built-in expectations that inflation will rise this year. And this is on the back of a low base effect last year, where a lot of countries saw deflationary trends. We have also seen a rise in commodity food prices, particularly higher oil prices. And some countries during the pandemic, they actually introduced government subsidies, for instance, for utility bills. So a lot of these subsidies will expire by the middle of this year. And that's also another reason that's lifting inflation. And of course, for yourselves, if you're exporters, you would know about the higher logistic costs. And so all these factors are lifting inflation expectations. And what this is doing is that it is filtering into higher long-term borrowing costs, as you were seen with the movement of bond yields of 10 years and above, right? So I think this is an emerging risk that needs to be watched. But some assurance is that it is quite typical during a post-crisis recovery that you will see a sharp surge in inflation, but thereafter it actually moderates, right? And this time round, we think that because underlying demand, because unemployment rates are still high, and because there are still labor market challenges, we think that the underlying demand is still quite weak and modest. And so a lot of these trends are supply driven, but not necessarily demand driven, right? So I think on that note, I think it's not really a big concern yet. It will only become a concern if we see that these inflation trends become more entrenched and costs are passed on to consumers. But for now, it looks like it's still fine, it's still manageable, but probably something that needs to be watched going into the second half of the year. So I've looked at, of course, macro trends, what we can expect of GDP, inflation. Now on macro landscape, I've summarized some trends and developments that could shape policies and affect supply chains in the region going forward. Firstly, it's the pandemic, which has made what we call K-shaped recoveries a lot more apparent. So what we are seeing is that sectors, they are doing well or benefited from the pandemic. Some sectors recovering faster versus others, they are still suffering, such as your tourism-related sectors, your airlines, and your transport sectors. Right? So this uneven recovery is expected to continue, but because of signs of turnaround in globally, I think this risk is actually decreasing, but nevertheless, the risk is still high. Okay. Now, secondly, the second risk is the US-China tensions. Now that has not gone away, despite having a new US president. And in fact, I think we have seen that this risk has risen recently, and we think that it will be an ongoing risk. It could escalate further, and it depends on how the US President Biden manages China. Now, I think we expect that he will maintain a hard stance on all trade, technology, and military issues surrounding China, but at the same time adopt a different approach from Trump, where it will probably be a more multilateral or predictable approach. In fact, we saw recently that the US added more Chinese companies to their US economic blacklist. And in fact, this week the US was supposed to have a meeting to consider major legislation to counteract against China's rising influence. So I think we can expect to see more of this. And in terms of the supply chain implications, I think we expect that more companies and businesses will continue to consider diversification into the region. Firms adopting China Plus One strategies, and possibly we could see two lines of supply chains emerging in this region. One that will be more tilted to China and one that will be more tilted to US. And moving on to the third risk, I think is the risk of new pandemic waves, as we are seeing now, new virus variants, which could linger, and it will linger until the world reaches herd immunity. In the event that a particular region or country decides that they will tighten the containment measures, then obviously there will be supply chain implications, possible disruptions to demand, but governments will likely be supportive. And I think they will take measures to manage the economic risk, right? And also, but I think at the same time, businesses also need to be ready, to be flexible, to handle any potential disruptions to the supply chains. Moving on, the fourth risk is that we are seeing higher input costs, commodity prices, and also long-term debt costs, even before the full recovery has taken place. So I think the spillover of this is we could see some disorderly and volatile market movements, and companies need to be ready to manage the impact on their balance sheet. The fifth risk is technology risk, and I think it's not just about digital disruptions, it's also about cybercrime, online risks, and the more digital that things go, these risks will continue to increase. The sixth risk is climate and environmental risks. It's a relatively new area and something which I think this region and developing Asia has tended to neglect in the past, even labor market issues, is what Christian mentioned earlier. But increasingly, I think as this market becomes more open, more developed, I think increasingly regulators in this region will be focusing on this as part of ESG, as part of their ESG focus. Another risk, I mean, to consider with this climate change is, if you remember in 2011, where Thailand was faced with very damaging floods that cost the Thai economy $45 billion or 13% of their economy. And it not just affected Thailand, but it also affected supply chains in this region, where the floods actually affected supplies of production of disk drives, cars, and rubber supplies. So again, this is something to be wary of. And firms not only to be wary of the potential risk to supply chains, but going forward as regulators put their minds and focus on this issue, right, there could be transition and policy risk to watch for. For instance, I think the latest is New Zealand. They have just passed a climate change law, and that requires all banks, insurers to report the impacts of climate change on their businesses. So this is an emerging risk and something that in the past it may not be the focus, but increasingly going forward, I think will be grabbing the attention of headlines and also for regulators. So this chart, this slide I've prepared, I actually did it in 2019 when the US first imposed sanctions on Huawei. And the reason I thought I'd share this slide today is because ASEAN is very diverse, economically and politically. And it's important that if you are considering coming into the region, to be aware of these differences, and also to, you know, given that in the landscape there's US and China tensions going on, to be aware that which countries have a tilt to which side. And as you can see from the top part of this slide is that countries such as Cambodia, Laos, Myanmar, or what you call the frontier economies, have a tendency to be more pro-China simply because they get a lot of resources, a lot of investments, a lot of funding from China. So naturally, they are tilted to China. And with these countries, there could also be labor issues on that note. Now, the countries that are more developed in this region, that sit in the middle, tend to be more neutral, as in they balance between both sides of China and US. So I guess you would call these countries, they move on both sides. On the far right, of course, is Vietnam, where they have shown a slight tilt towards US, but Vietnam tends to be a little bit more also focused on independence, where they also in the medium to long term try not to be dependent on either side, and that's why they try and develop a lot of their homegrown technologies. So I would say that this is something to be wary or to be mindful of. And if you see that the pink color sign, which indicates countries that are on the US Treasury's FX monitoring list. Now, reason I added that is because it's also good to be mindful that during the Trump period, he could use anything possible to basically bring certain countries closer to their side. And what happens is that it's not part of their legislation, where if you are labeled a currency manipulator by the US Treasury, that this will be followed by sanctions. That's not the case. But as what we saw during Trump's period, it could have been a matter of consideration. So something to be mindful of in the future, that they could use different means to try and bring different countries in the region onto different sides. And so I think it's something that also needs to be considered as part of the geopolitical landscape. Okay, another part I'd like to share is about China's growth plan. I think it's, everyone knows that where China is going in terms of global influence and economic influence, it's only going to go further up north. They have plans to double the size of the economy by 2035. They have a dual circulation strategy where they will rely on domestic consumption, on external demand and investments to help them achieve these growth targets. And they also plan to improve the resilience of China's supply chains, meaning that I think they don't want to be entirely dependent on a single country. For instance, in terms of technology inputs, dependent on US companies, right? So I think as a result of this, you're going to see that they will build their ecosystem. They will have more firms adopting China's +1 strategy, especially if they foresee that could be more trade frictions with the US. And I think the plans to be more resilient, to grow their supply chains, I think to expand the supply chains in the region could potentially mean that supply chains will be shortened, they would favor possibly local suppliers or foreign firms operating locally or regionally. So I think it makes sense that, you know, if to be closer to this market, to be either have an exposure there or to have some exposure in the region, just to ensure that there is a resilience and that you are part of that supply chain plan. And I think increasingly going forward is to look and consider China and ASEAN as a single market. And as you can see from the trade between China and ASEAN, that has grown exponentially since 2000, right? And I think going forward, it's probably, you know, it's quite obvious that going forward, especially with the latest RCEP that was just signed, that it will continue to go further up north. And I think one thing to highlight is that we do see that in terms of the market access to exports, when you look at and you compare across all the different trade pacts and economic blocks, I think this region has shown a lot of progress, especially and with the RCEP, I think it will continue to increase in terms of gaining market access to exports. Currently, back in 2019, it was 29% of global exports, and I think going forward with RCEP could easily surpass 30%. So I think that wraps up the section on, you know, just looking at the current economic landscape and the macro landscape going forward. Basically, to consider that the global economy is recovering, it's showing signs of turnaround. There is more optimism that even with a resurgence in cases, that things will not be as bad as last year, but still the downside risk linger, right? And also to consider in this macro landscape that going forward, there will still be ongoing geopolitical risks coming into ASEAN in this region. It's very diverse economically and politically. Which countries that you consider, you know, because that will determine the risk and potential policies that we will face, right? And also to consider that with China going forward, China's growth plans going forward, to consider that China and ASEAN together are going to be part, to think of this market as one, right? So now on the final section of my presentation is to talk about Malaysia. And first up, I thought I would share about the economic profile of the country. So this profile was in 2019, before the pandemic. But I think the key indicators have not changed that much, in the sense that, I mean, the population is still around 32 million. It is a fairly young population, median age of 29, 7% of the population that is aging. In terms of the GDP, it's about $360 billion, GDP per capita of $11,000, and possibly move to 12,000 by 2025, and Malaysia is currently a high, not a high, but a high middle income economy. But I think they are trying to reach a high income status by 2025. But that really depends on, I guess, the growth path in the next few years. GDP growth averages about 4.5% to 5.5% in the last decade. Inflation typically is between 2 to 3%. Right, and in terms of interest rates, it's always been about 3%, but because of pandemic, the central bank actually cut Malaysia's interest rates by over 100 basis points, so it's now sitting below 2%. Malaysia's ringgit has typically been, you know, hovered about $4 to the US dollar in the last few years. Labor force of about 16 million, and typically the unemployment rate is around 3%. But it's currently at 4.8%, increased by about 1% because of the pandemic. Now, I think one of the key strengths for Malaysia is that we have a current account surplus, we have a high domestic savings. So I think this actually helped to cushion some of the impact of the pandemic. You know, last year and through this year, where they actually tried to use some of these savings to try and cushion the effects of the pandemic and to stabilize the economy. Now, in terms of the trade partners, this was in 2019, but I would say as of now, Japan is not in the top 5. In fact, EU is now in the top 5, but typically the top 2 are always China and Singapore. in terms of exports and imports. In terms of the growth outlook, as I said, I think Malaysia this year, the central bank is optimistic that we will be on a higher growth path this year. And I think the number of growth drivers very much on riding on external demand, on the global recovery, on technology, because in Malaysia, further up north, we have a strong economic base further up north of Malaysia that supports the technology supply chain in this region. And we house a number of multinational companies that supply chips, semiconductors to both US and to China and the region. Also, I think going forward, the government plans to roll out a lot of infrastructure projects, transport, digital. They have a digital economic plan where they aim for Malaysia's digital economy to grow to about 23% of GDP. And I think we also have a number of investments that's in the pipeline, but was delayed because of the pandemic. So I think, the hope is that, post-pandemic, when things stabilize, a lot of these investment projects will actually come back and be executed. In terms of the economic landscape at the moment, Malaysia did see a resurgence in cases, and that is why I think we've seen that the economic recovery has been slower this year, earlier this year, because of tightened containment measures, right? But I think going forward, because the economy has reopened, we have seen a strong rebound in exports, much stronger manufacturing activity. The unemployment rates are still high, but I think the expectation is that as things continue to recover going into the second half, that the unemployment rate will actually continue to moderate. Okay, so overall, I'd say manufacturing export sectors have been doing well, better than expected, whereas I think the domestic sectors, the services-related sectors, are still recovering simply because they were affected by the resurgence in infections and also tighter containment measures. In terms of policy support, I think just like a lot of other countries, the government introduced a lot of policy support to help the economy to stabilize. In total, it was about 340 billion ringgit of measures that were announced since last year. So, and I think the government will not hesitate, I think, to extend some of the support measures, but on a targeted basis, if they need to, should the effects continue. And in terms of the key catalysts for investments and growth going forward, I think some of the things to note is that, well, Malaysia, I think when you think about compared to the region, we aren't on top. I mean, we aren't on ahead like Vietnam, Vietnam in terms of attracting the kind of scale of FDIs. But Malaysia tends to be somewhere in the middle of the pack. And when we speak to a lot of businesses, local businesses, we speak to the investment agencies, I think what Malaysia offers is that they are relatively lower risk, and a lot of businesses like predictability, and they like that the infrastructure is more developed compared to other countries in this part of the region. So I think Malaysia offers that. And in terms of cost of doing business, it's not that high compared to, some of the more developed Asian countries. And yet we offer, infrastructure and development that is of a relatively similar scale, right? So I think these are some of the positives for Malaysia. And I think through this period, we've seen that the investment prospects are still there. The country is embarking on enhancements of digital infrastructure. They have introduced a number of measures to attract investments. They have recently liberalized the foreign exchange measures to actually assist the exporters and investors. We have seen actually pretty strong and robust foreign portfolio flows. FDI flows are lower, but still positive, right? And we did a study looking at trade trends in Malaysia before the trade war, through the trade war, and through the pandemic, and we found that Malaysia's trade has actually increased through all these three periods. And China, Singapore, US, Japan, EU are still one of the biggest trade partners for Malaysia. So I think it just goes to show that I think Malaysia is still in a position to offer a lot of attractive features for companies that are looking to move and come into this region, to diversify, and also as a gateway to the rest of the region, because we have also seen a number of domestic Malaysian companies that have embarked into the region using Malaysia as a base. Right. So this would be my last slide, and I guess for yourselves, foreign exchange movements volatility is also something that you consider. And what we've seen that Malaysia ringgit actually has always been quite stable in terms of its relative movements against a lot of other currencies. In fact, it's tended to move on the lower end, meaning that it doesn't over appreciate, right? And I think in that sense, it offers a lower cost of doing business for a lot of companies that are based here, right? But still at the same time moving alongside with other currencies. So I think in that sense, it offers some form of stability and certainty for companies as far as managing Forex and managing balance sheet is concerned. Okay. Right. So I will end my presentation here, and I will hand the mic back to you, Bettina. Thank you.
Thank you very much, Julia, for this most elaborate economic outlook on Malaysia and the region and quite some other large parts of the world. I hope that everybody enjoyed this outlook and took some helpful insights with him or her. And we'll now gladly move on to our Q&A session to round up today's webinar. So let me start with the first question. You mentioned the China Plus One strategy. How can a company adopt this, and how to select the right plus one, which is, by the way, a question that applies to many other parts of life as well.
Maybe I start here. Well, I mentioned this China Plus One strategy because, I mean, it has been basically discussed over the, I think, past 8 years as a business strategy. There is, of course, not really one size fits all. I mean, Julia made quite a few good points why Malaysia could be your plus one. But again, I think it depends really on the industry, on your business in the region. I think that is also what Julia mentioned when it comes whether you're doing more business with China or the US or the EU. I think that plays also a role. And of course, for choosing the right jurisdiction or the right target country, certain fixed parameters should be considered, such as wages, such as the infrastructure, the market access, investment limitations, if they apply, and of course also tax and other regulatory frameworks, which can be also compared, for instance. So what we sometimes do is that we do comparative analysis, assessments for clients to compare different countries in the region. But again, like there is no one size fits all.
Juliet, do you want to add anything?
Yeah, sure. I think it's really down to also your appetite for risk, right? As I said, ASEAN is very diverse, and some countries have very high growth rates. And sometimes you go into a particular market because you want the access to the local markets. For instance, Indonesia, right? So what I can share is that for instance, businesses that have come to Malaysia, and I asked them what attracted them. A lot of them say it's because they see Malaysia as a relatively sort of like I said, middle of the pack. The risks aren't as high as if you were going to some countries like with less established or less certainty in terms of policies, in terms of regulations, where it could change overnight. I mean, look at what happened in Myanmar, right? So you not just on the cost perspective, but also in terms of business certainty. That's what they say. We don't mind a slightly higher cost. But as long as you can give us a little bit more certainty, lower risk, we are actually happy with that. Also like to share is that in the last few years, there have been a number of Chinese companies that have come to Malaysia to set up their base. One thing they like about Malaysia is because it's multicultural. So if you come to Malaysia, you will see different groups of people. You will see Chinese, you will see Malays, you will see Muslims, you will see Indians, you will see you will see Koreans, you'll see Japanese, you will see Americans, you'll see Europeans. So it's very diverse in that sense. And so it caters to, I would say, a lot of, sometimes, I mean, businesses, they go because they know someone there, familiarity. So what I can share is that the Chinese like Malaysia because of the diversity that it has, even in terms of the Chinese population with a lot of dialects, with a lot of cultures, it meets their needs. So again, I think it comes down to the level of risk, what kind of market access that you are looking for. And I think for Malaysia, in fact, it's, as I said, it's offered attractiveness in terms of market access, in terms of infrastructure, in terms of the risk level, in terms of cost of doing business. And again, as I said, China, we've had a lot of Chinese companies that have actually come to inquire and have actually come to Malaysia. So I suppose they themselves have considered it as part of their China Plus One strategy.
Thank you very much. With regards to the time, I'd say we take in one other question before we close our session for today. But here I have, are there government grants to support digitalization in ASEAN? Can we attend to this?
Okay, I can start here. Yes, there are certain tax incentives and grants provided by a number of governments, actually, for, among others, also digitalization. If I'm not mistaken, I know that Malaysia provides some tax incentives, and also Singapore has some grants available. However, it always depends who is applying for those grants and incentives. So you need to comply, of course, with the, you need to be eligible for those grants and incentives. For instance, certain grants might require a certain local shareholding, and of course it has to be assessed to what extent this is applicable. But there are incentives and grants which might assist or aid companies when it comes to the digital transformation.
Thank you very much. Once again, Julia, would you like to add anything to this point?
Yes, actually, during recently the pandemic, the government introduced quite a number of policies for foreign companies looking to relocate to Malaysia, and particularly in high value added type of investments. And I would say digital, any technology related would be considered a higher quality type of investment. Of course, there is a certain criteria to meet to be eligible. And I guess will be having a session with MIDA, our local investment agency, and I think they will be able to share all that information on that. So, but I would say yes, there has been a number of incentives, because I think Malaysia is on an investment drive. So they are looking to attract a lot of foreign investments, particularly in the higher quality, moving up the value added chain type of investments, and digitalization technology is one of them.
Thank you very much. So once again, with regard to the time, I would suggest we close our session for today. Thank you very much, Julia. Thank you very much, Christian, for those most valuable insights into the highly dynamic Malaysian business environment and what to expect with and beyond COVID-19. Thank you, everybody, for joining us today and sharing our presentation. Of course, we have taken down all other questions that came in during our Q&A session, and none of these will be left unattended. We will come back to you on a bilateral way. Either Christian or Julia will be happy to answer your questions. We recorded this session, so later on you will be able to recap or to share with your colleagues at your very personal convenience whenever you like. And as always, I will be happy to share the slides with you upon request. Once again, thank you very much to everybody. Have a safe day and stay healthy, and hope to see you soon. Bye-bye.
Thank you. Bye-bye.
Thank you. Bye.